Hey guys, this is Abe, and in today's video, I will be talking about the latest tool developed by TradyTics, and this tool is called the Market DEX. And this tool basically, in a nutshell, it measures the cumulative delta for the entire market for the entire day. And so it will give you a green bar when the sum of the cumulative delta is positive for the entire day, and it will give you a red bar when the sum of the cumulative delta is negative for the entire day. As you guys can see here in the tool, you also have this yellow line, which is the price of SPY, and each one of these bars represent one day. Now, the purpose for this tool is to try to predict the move for the next day for the market based on the cumulative delta. Now, bear in mind this cumulative delta, as far as I understand, is based on the options flow. So if the sentiment was very bullish, you will have a positive cumulative delta. And so chances are the price will continue moving up the next day and so on. And if the sentiment was bearish, you will have a red bar. And so chances are the price is going to move down on the next day and so on. But we will talk here in a minute about the strategies to trade this tool or how to trade this tool. But first, let's talk a little bit about delta. What is delta? Delta, in theory, is the estimate of how much an option's value may change given a $1 move up or down in a given security. The delta values will range between -1 and +1, with 0 representing an option where the premium barely moves relative to the price changes in the underlying security. Now, delta is a positive value for long stocks. Like if you buy actual shares, your delta is +1. It's also positive for long calls, which means buying calls, and for short puts, which means selling puts. These are all bullish strategies, right? Delta is the negative value for shorting stocks, for shorting calls, which means selling calls, and for long puts, which means buying puts. These are all bear strategies. So delta will be a +1 for shares long and -1 for shares short, which is a given. If you buy actual share of the stock or short that share for the stock, it's a dollar for dollar move, right? For options, it's a little bit different. Obviously, deep in the money options will have +1 or -1 delta because it will move just like if you actually own the shares. But for options that are closer to the strike, like where the strike price is closer to the actual price of the stock, the value ranges between -1 and +1. And to give you an example to show how it will change the premium or how it will affect the premium of the option that you'll buy, we're going to go ahead and take a look here at the $408 call for SPY for expiration of 9/16. So this screenshot was taken as of close of day Friday, the 9th of September 2022, where the price of SPY closed at $406.20. So the premium for that $408 call, the bid was between 350 and the ask was at 352. So let's just say we go in at $351. And this particular option has a delta of 0.46, meaning if SPY moves to $407.20, which means it moved $1 to the upside, the premium for my option will move from 351 to $397. Of course, that's given that there was no effect of theta or implied volatility, but we'll talk about these in a different video. But that kind of gives you an idea on how much your premium is going to change based on the move of your stock, and that's what delta is. So the strategy for trading delta, or try to measure this cumulative delta to try to predict the move of the market, it suggests that if we have a strong positive sum for cumulative delta for the market that the sentiment is very bullish. And so chances are we're going to continue move higher. And if it was the opposite, where the sum of cumulative delta was negative, that the sentiment is bearish, and we're going to be moving to the downside. Um, and basically, in a nutshell, that's what Market DEX is trying to tell you here is that tomorrow is more likely to be green because today's cumulative delta was strongly positive. Obviously, the higher the bar, the strong, the higher the sum of cumulative delta, and same for red bars. The longer the bar, uh, the higher the sum, or actually the higher in the negative, for cumulative delta. So with that, there has been two strategies that were suggested for trading this tool. And I will talk about pros and cons for both strategies, and I will throw in my 2 cents of how I would like to start trading it. So the first strategy suggests that you look at delta cumulative sum over here towards the end of the day, like 20, 30 minutes before market close, and you see that it's strongly green. So what you're going to do is buy a call. Of course, you're going to give yourself some time on that call. Don't just buy something that's 1 or 2 days that are expired in 1 or 2 days. Give yourself some time on them. So the idea is to buy a call by the close of day or before the close of day and hold that call until the close of the next business day. So, for example, if today was Monday and we close with a green candle, or we're showing that we're going to close in a green candle, I would buy a call and I will hold this call until before close on Tuesday. Now, the second strategy suggests that we closed Monday with a green bar, that then I will buy a call Tuesday morning and I will hold that call for the entire day and close it by the end of the day. So to switch to the chart and talk about both strategies over here, starting with the first strategy, which is basically buy in at the close and hold it until the close of the next business day. On a day like this one, you will see the pros, the major pro for this one, which basically is gap ups, right? So, for example, on September 8th, SPY closed at $400.38. So, assuming that you bought a call before the close of the 8th, on the 9th, we opened at $402.74. So you got a nice gap up. So even if you close it open, actually, you've made some money on this one. And if you held until the end of the day, that would have been an outstanding win on it, right? So that's what goes for the pros for buying towards end of day and hold until the end of next day. Obviously, you're supposed to have a stop loss. They suggest to have like a 20 to 25% stop loss. Um, and that would work if you go like 2, 3 weeks out in expiration on your option. Now, let's talk about the cons for such a strategy. So we don't have to go back very far, but to look on the 7th, we actually had a green bar. If we go back and look here on DEX, we can see the 7th had or the 6th had a green bar and the 7th had a green bar. So to go back over here, the 6 had a green bar. So if you bought towards end of the day, we closed at $397.78. However, on the 8th, we actually opened at 395.39. So we opened to the downside. And as a matter of fact, we even dropped and hit a low of 394.12. So chances are, even though we had a green day, or we had an up day, you probably would have been stopped on this one just because we opened lower than what we closed and the price even moved a little bit lower. So this tends to happen because price does not open necessarily at the close of the previous day or higher than the previous day all the time. It sometimes happens, but it doesn't happen all the time. Price moves in waves, right? And these are daily candles. We're looking over here. Each candle represent one day. So you will see the price move in like this. If you switch to an hourly time frame or so, this is how the price moves. Even if it moves to the upside, a healthy move is going to look like a staircase, up, down, and so on and so forth. And so these are the major, I guess I would say the two pros and cons for such a strategy is that sometimes if I'm in a call and we open with a gap down or, we pull back, we have a pullback, I might get stopped out from this trade and basically lose money for that day. And well, the plus for it is that if we gap up, I'm already making money. And if we continue moving up, then hey, I'm doing great. Now, the next strategy, which is buying at the open of the next day and holding for the entire day, I tend to prefer this one a little bit more just because, when the day starts, you're basically, if we actually opened lower than the previous day, you're actually getting a better entry on on the stock or on SPY, right? So this strategy works best basically for SPY because we're actually looking at the entire market, the cumulative delta for the entire market, and so it works basically for trading SPY. We're not going to be using this for trading Tesla or Netflix or any of these blue chips. We're going to be actually using this to trade SPY. So assuming that we actually started opening at the start of day, you actually got a much better, for example, here on the 8th, you got a much better entry than you would have gotten on the 7th. You got like basically to buy the dip. And if you held for the entire day, and let's just say you have about 20 or 30% stop loss, you held for the entire day, you got in here and you got out somewhere up here, right? So you captured this entire move. Now, what is going to be the cons for such a strategy? Well, you're not gonna catch these gap ups, I guess. That's what you're gonna miss out on, which is absolutely fine with me. You can't predict these, and they don't happen all the time. And most of the time, gaps end up filling anyways. And so you'll probably be better off, buying the dips or buying the open of the day. The other thing that I would say I kind of have against these two strategies is holding for the entire day is that you have days like this one here on the 8th where, the price moved up and it pulled back strongly, this would have destroyed the premiums or the gains that you've had on the premiums. And then it moved back up, but it had a lot of choppy actions. So probably the gain that you would have gotten here wouldn't have been as much as the gain that you would have gotten here on this level. So I honestly think that you can combine your technical analysis along with this tool, use this tool as a confirmation, and trade based off of that. So it's absolutely fine to have a bullish bias or bearish bias, but we always look at levels for the market, at least, speaking for our group. So we always look at levels for the market. And so we usually you guys see me charting ES for the most part. I just didn't want it to be too busy over here. And we would say things like, okay, if we break this level or if we hold this level, then chances will reverse and we'll touch this level and that level and so on and so forth. So I think that would be a better way to actually trade this strategy by looking at levels rather than holding for the entire day. Or, hey, you can actually start trimming at certain levels if you have multiple contracts for your trade, and just leave a runner until the end of the day. If we spike towards the end of the day, that will be great. If not, it is what it is. The other thing is that sometimes we have profit taken towards the end of the day or profit taken towards after lunch or so, you might see move go into the opposite side for profit taking. The last thing, which I think is the most important thing here, is that this strategy does not work around major economical events, and that is something you definitely have to keep in mind. Meaning, on September 13th, we have the CPI report coming out for inflation, this is going to be a very highly volatile day. And honestly, I'm not sure if the cumulative delta sum for a day like Monday or Friday is going to be entirely accurate, just because there's going to be a lot of hedge positions taken in the market that could actually mess with the sum of delta. To give an example, institutions that are going long, for example, on the on the market, or they're going long on a lot of positions, they're definitely going to be investing in some hedges to the downside, whether it be in puts on SPY, or calls on VIX or SPX, buying puts on it or so, just in case if the market takes a dip for the results for the CPI, if the data comes in higher than expected, then they offset some of the losses that they have on their stocks with the hedge positions that they have. And these guys, they trade big money, and so their hedge positions are very, very large. And we've seen that back in July and in August, as a matter of fact. In June, let's just say, and July and in August. I remember mid-July, expiration used to have like large puts being bought in the hundreds of millions of dollars total. Same thing for August, same thing for September 16th, if I'm not mistaken. There was lots and lots of puts that were being bought, and I think it was like back in July, it used to be 370 puts or something like that. And so you can actually go in and check on these um, expiration dates or strike prices, and you will see outrageously high open interest. And still until this day, September 16th, have a very large open interest in 370 puts and 380 puts. So this is something to just keep in mind, ahead of major economic events, like you would have the CPI, you would have the FOMC meeting. These days, I would say definitely, take a step back. If you like trading the strategy, that's okay, but on days like this or ahead of days like this, it might be okay to take a step back or just scalp for the day rather than just, taking an entire position. And I would say, zero data expirations might work with this, but it will be very, very, very risky. Just, due to the volatility, if it happens throughout the day, like a pullback or something like that, you would erase all of your gains. And unless you're deep in the money, zero data expiration towards the end of the day, theta kills the premium, so it will be useless. So I would definitely say I wouldn't be using zero data expiration with this strategy. The other thing I want to talk about here, which is the levels. Again, to go back to the levels. And so sometimes some levels are key levels, and a break below or above a certain level could trigger a squeeze one way versus the other. So instead of going with percentages, and let's just say your percentage did not hit by the break of a certain level, if your analysis indicates that, for example, let's just take a look here at on ES over here, which is what we look at usually when we trade SPY. So for example, I would say 4074 is a key level, and let's just say, just for the sake of this example, we were trying to be short over here in this level, in this area. A break and hold above this level, even if I didn't hit my percentage loss, could indicate the continuation of the price to move to about 4100 or maybe even higher. So there is no reason for me to wait for my percentage loss to hit. I would go ahead and just close my position at that point. The other thing is that, you know, if I was in a trade long, like from over here, from this area, the break over 4017 or so, we were bullish on this move. I probably would close once the price hits this level rather than wait until the entire day, because we could have rejected over here and it could have erased pretty much all the gains that we've had over here. And so, secure and profit is a very important thing. And it would work great if you actually have multiple multiple contracts in your position to start trimming your profit as you go, because you never know. Something could happen throughout the day that will offset the course of the day. catalysts, some news, Russia and Ukraine, China and Taiwan, President Biden. You just don't know. So always, I would say, always, if you have a stop loss, if you're, well in profit, it's not going to be a bad thing to go ahead and move your stop loss to break even so that at least you're at a risk, somewhat of a risk-free trade. It wouldn't be a bad idea for you to secure profits as you go. Remember, profits, no matter how small they are, they add up, right? But again, personally, I much prefer levels than having to hold for the entire day. And I would definitely use this tool as a confirmation for my bias to the market rather than um, use it as an actual tool to trade. Not saying it doesn't work. So far, we've been tracking every day and it's been spot on. It's been doing great. And looking at the options, especially the one with shorter expirations, they've been doing some crazy win percentages. But then again, we're not gambling over here. We're trying to trade based off of technical analysis with calculated risk. And so looking at the levels is going to be a key for it. So to look at Friday, for example, where we had a green bar, you know, this tool is telling you basically that day is probably going to be green. But for me here, when looking at the chart, depending on what ES does overnight on Sunday night, I would much prefer to see like maybe a little bit of a pullback and a rejection over here at the 4075 area. And if we reject it, it would be nice to actually take a call here and probably hold it upwards of about, I would say, 4112 or so. Definitely will not be holding anything into Tuesday for CPI. And, I definitely don't recommend the trading news, but, you just have to keep things like that in mind. You just have to keep your levels in mind. It seems like they are going very bullish over here. Uh, Again, the 4100 seems to be the level that they're targeting. It would be really nice if they actually had a little bit of a pullback here on Monday for us to go along and probably hold for the entire day. We will try to look for the best option that will provide us with highest liquidity and the highest delta so that every time the stock moves up, every time SPY moves up a dollar, we'll get the most money or return on investment that we have in that trade. And we will have a stop loss, and if it hits, it hits. Obviously, this is what the calculated risk is all about. Um, at the end, this video was mainly dedicated for members of our Discord, which if you're watching us on YouTube, I would love for you to follow and subscribe, and you can find the link in the description for our Discord. We are running a special for 1 month for free if you would like to join our Discord, and the details will be in the Discord. We have a great group of people and very like-minded traders, and it's a great, nice, small community. We're trying to grow it, but you know, we would love to see you there if you would like to join us. And yeah, that's about it. If you guys have any questions, feel free to comment or DM me via Discord or tag me in chat. Thank you so much and have a great day.